They say Danes love taxes, but you just need to look at which countries have the highest tax evasion rates to understand that this is false. Europeans don't exactly love taxes and claim they are too high. This is evident from the taxquake caused by tax evasion and capital flight that is happening in many countries on this list. In this video we will see the ranking of the 10 nations with the highest tax burden. There are really many types of taxes, and it is impossible to keep track of all of them. We based our analysis on OECD data on income tax and social security contributions for a single worker with an average salary. In the final bonus, we will also see the 10 European countries where families pay the most taxes. Welcome to this new video from Amazing Europe. Number 10, Italy. Italians do not like taxes, as they are the first to evade them. As we have already seen in a dedicated video, in 2019 more than 190 billion euros were evaded. A quarter of the VAT evaded in the European Union belongs to Italy. Income taxes in Italy range from a minimum of 23% to a maximum of 43%. According to OECD data, between income tax and social security contributions, almost 30% of the average Italian salary goes to taxes. But if we take into account overall taxes, the situation obviously worsens. The main Italian economic daily newspaper states that the real tax wedge in the private sector is equal to 60%. The result is capital flight abroad. Italians have hidden assets worth a total of 300 billion euros abroad, of which 82 billion in Switzerland alone. Number 9, Finland. Not even the happiest country in the world seems happy to pay taxes. Finland is the 6th country in the European Union for per capita evasion, with more than 1,900 euros of evaded taxes per person. Yet a survey found that 80% of Finns are happy to pay taxes, and 96% believe that paying taxes is an important civic duty. On average, just over 30% of a Finn's salary goes to taxes. There are more brackets than in Italy, and they start from a tax of 12% for the lowest incomes up to 44% for those over 150,000 euros. What is striking is that, at least according to OECD data, Finland is one of the few countries on this list that does not cut income taxes for families with 2 children. In Finland, if you are of the Christian religion, you pay an extra tax. Members of the Evangelical Lutheran Church and the Orthodox Church of Finland are obliged to pay a tax that varies between 1 and 2.2% of their income. In other countries that we will see, this tax will be much higher. Number 8, Luxembourg. Many of you might be wondering, but wasn't Luxembourg a tax haven? Luxembourg has been off the blacklist of tax havens for about a decade now. However, there are still many advantages to opening a company there. Corporate taxes make Luxembourg an attractive destination, at least compared to other European countries. Personal taxes, however, are high, even though they are more balanced than in the other 2 countries we have seen so far. Just think that there are 23 income tax brackets. In Italy, you pay 23% income tax if you earn up to 28,000 euros. But if you earn even €1 more, you have to pay a whopping 35%. In Luxembourg, it is much more balanced. However, taking the average, OECD data report an average taxation of 32.1%. However, a single-income family with 2 children has many advantages, as we will see in the final bonus. Number 7, Austria. Austrian governments can't seem to make up their minds about income tax rates. In the last 5 years, they have had 5 different rate levels, and this is the one for 2024. It ranges from tax exemption for the poorest to 55% for those earning more than €1 million a year. Not low taxes indeed. The OECD reports an average of 33.2%. It must also be said that if you go to Austria, you realize that their taxes are really used for something. Public services and educational and health facilities are of high quality, at least compared to the average of European countries. Perhaps as a thank you for this, tax evasion is not very high in this country. It is the first country among those seen so far that has a per capita tax evasion lower than that of the European Union. Even in Austria there is a church tax. Both Catholics and Protestants must pay about 1% of their income to their respective church. Number 6, Hungary. Taxes here are very different from the countries we have seen so far. In Hungary there is a flat rate of 9% for companies and 15% for individuals, regardless of income. However, Mandatory social security contributions are high, which brings the average tax rate for a single person with an average salary to 33.5%. However, the flat tax is convincing many foreign entrepreneurs to open a business in this country. Every year, thousands of foreign companies open in Hungary, especially from Italy, Germany, Austria, and the United States. The approximately 450 US companies present in Hungarian territory in 2020 produced more jobs in Hungary than investments from any other country. However, all that glitters is not gold. The VAT on most products is 27%, one of the highest in Europe. The mandatory social security contributions for the worker are very high. We are talking about 16.4% of the average salary, higher than in the other countries we have seen so far. However, Hungarians are very respectful of paying taxes, as they are among the least evasive people in the European Union. Number 5, Slovenia. Let's say goodbye to the Hungarian flat tax and return to the classic progressive taxation, with even higher tax levels than those seen so far. The average tax rate for a single person is 33.6%, but it decreases for a single income family with 2 children. Social security contributions in Slovenia are the second highest in Europe, with an average cut of 19% at the expense of the worker. One thing that greatly disadvantages Slovenians is that wages are lower than in many of the nations on this list. Let's do some calculations to understand better. The UN reports an average salary of €31,300 per year. With that salary, in Slovenia you are taxed at 33%, thus obtaining a net income of almost €21,000. In Luxembourg, the average gross salary is €79,600, taxed at 39%. The difference between the two salaries is really high. But even considering a Luxembourger who earns like a Slovenian, thanks to the lower taxes he would earn a good €4,000 more per year. Number 4, Denmark. The Danes are said to love taxes, even though they are very high. But is this true? For personal income, there is a total tax rate ranging from 38 to 55.9%. The average tax rate for a single person is 35.5% of their salary, and for families it only goes down slightly. The VAT is one of the highest in Europe. We are talking about 25%, with total exemption for some products such as newspapers and hospital care. However, the Danes see that their taxes are repaid in quality services, such as excellent schools and hospitals. Parents are entitled to 52 weeks of parental leave, 32 of which are paid by the state. Several surveys have stated that Danes love to pay taxes for these reasons. However, official tax evasion data reveals that Denmark is second in the European Union in tax evasion. In 2019, it was just over €3,000 per person, second only to Italy. Can it be true that the Danes love taxes if they evade them so much? Do you know more about this? Number 3, Lithuania. One of the European countries with the lowest salaries is also one of those with the highest taxes. In reality, personal income taxes are not that high. There are only two brackets, 20% and 32%. But it is the mandatory social contributions that make the situation much worse. In Lithuania, the social security contributions at the expense of the worker are the highest not only in the European Union, but in the entire OECD area. They reach an average of 19.2% of the salary. This means that 37.1% of the salary of a worker with an average salary goes in taxes. And for single-income families with 2 children, the tax rate is the same. It is not easy to raise a family in Lithuania, at least from an economic point of view. Lithuania is the nation of the 36 OECD countries with the highest taxation for families, even counting the various family bonuses. Yet there is little tax evasion. In 2019, just under €1,100 per head was evaded, compared to an EU average of around €1,600. Number 2, Germany. Tax evasion in Germany is slightly lower than the European average. However, many entrepreneurs are fleeing abroad with their companies, crushed by German taxation. 16% of medium-sized companies interviewed by the Federation of German Industries have already moved part of their production abroad. A further 30% are considering following suit. In 2022, €125 billion more left Germany than came in. The German Institute for Economic Research is alarmed and says that Germany is at risk of losing most of its industries over time. This is the German tax system, and as you can see, income taxes range from 0 to 45%. In addition, the worker must also pay social security contributions, which are among the highest in Europe. On average, the German worker will see 38% of his salary deducted in taxes. Furthermore, in Germany there is a high church tax. Catholics, Protestants and Jews are obliged to pay 8 or 9% of their income to their respective church. According to a YouGov poll, the majority of Germans would like to abolish this tax, while others believe it is essential to receive quality services from their church. What do you think? Before revealing which European country pays the highest taxes, we invite you to subscribe to the channel and activate all notifications by clicking on the bell. And when this video reaches 400 likes, we will also publish a video on the European countries with the lowest taxes. Number 1. Belgium. Euronews states that Belgian citizens are increasingly frustrated. Between the various taxes and contributions, Belgians see an average of 40.3% of their salary deducted from their paychecks, up to a maximum of 65%. The more you earn, the more new taxes are added. The result is a paradoxical situation. The minimum wage in Belgium is just over €2,000. Euronews points out that, taking into account all the taxes that are added for the richest, the net pay of those earning €45,000 per year approaches the minimum wage after deductions. Moreover, according to some surveys, Belgians do not see a return on their taxes to the same level as, for example, the Scandinavian countries. And this is leading to increasing frustration among Belgians and also to a great deal of tax evasion. Belgium is the third country in the European Union for tax evasion per capita, with almost €2,700 per person evaded in 2019. Even for families, Belgium doesn't do well. Here is the ranking of the 10 European countries with the highest taxation for single-income families with 2 children. Germany and Luxembourg disappear, to make way for the Netherlands and Norway. This video should be watched together with another video we made on the European countries with the highest salaries, which we have linked in the top right corner. We did not want to go into the details of all European taxes, because there are really many. We simply wanted to give you a general idea of the countries where salaries are most heavily taxed. Let the community know more details about your nation by writing them in the comments. That's all for this video. See you next time.